Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on August 22nd. My name's Ian, joined here by David. David, good to have you back in here. I know you've been going through some car issues, so we're stuck with you a little while longer. Is that?
Well, it's been an interesting day, especially when you have to start the day with your car literally shutting off the minute you pull into the parking lot at work, and you're like,
That's just, you're not allowed to leave.
all
You're stuck
right,
here.
I guess
Yeah.
I'm here for a while.
That's the new return to office policy. They just turn your car off and you're not allowed to go.
Yeah,
So
no, just mechanical problems. Another one of those little hurdles you got to get up there with when you drive our older cars,
yeah.
I guess, or just cars in general right now. But
Yeah, yeah, makes sense. I mean, hurdles luckily are things that you can hopefully get by it.
yeah.
Market's been going through a little bit of a hurdle itself over the past week or
Mhm.
so. And diving in, we'll take a look at a few different charts today on the technology side of things, on the retail side of things. Big week for both of those spaces, and in a couple different ways. Big pullback in tech. Retail has seen kind of a mixed bag. Some areas looking a little
Mhm.
better. But we'll dive into that. But looking at the performance side, you really kind of see the mixed bag portrayed throughout in looking at major index and equity market returns. If you look at like the major global ETF list, a lot of red over the past week. I mean, we saw a lot of areas just in the red. The S&P down about 1% over the trailing week. We're recording this Thursday afternoon. Q's down 2.5%.
Mhm.
The only kind of major equity area that was positive was EFA,
Yep.
up just under 1% over the past week. So global equities holding up a little bit better. Domestic equities had seen more improvement, so they've seen more of a snapback. I guess
Mhm.
fair enough to say. We had gold down a little bit, crude up a little bit. Not really much going on from the commodity space right now.
Not too much change there. And I mean, in most cases with a lot of these charts or even a lot of this performance, we saw some reversals down from sort of rally highs that had occurred
Hmm.
last week, or at least all-time highs in some cases that had occurred last week. So in a vacuum, negative weeks kind of sounds, but for us, in many cases, we sort of saw exhales out of a lot of charts, or if even if we saw an exhale or a reversal down on some of them.
Yeah.
Most continue to sort of maintain their current position right now, still on the overbought side, but not to the extent that we would say heavily overbought with many of them, as maybe we saw a couple of weeks ago or even a few weeks ago with some of these index positions. But it's been much more of a interesting individual stock week as far as a lot of the action we've seen from charts and what's transpired there. Indexes have sort of maybe taken a back seat in terms of what we've been looking at because we've just seen so many different charts break out or break down, whatever it may be.
Yeah, that's well said. I mean, when you're looking at one of the biggest stock that I've seen on the top of everybody's radar, NVIDIA, right? NVDA,
Mhm.
that would be the first of the five charts that we'll kind of look toward. I mean, you saw this chart rattle off six consecutive buy signals going back to April and just march straight on higher, new all-time highs at 184 posted last week, like you said. And then with movement this week, turns around and gives a sell signal. Oh my gosh, NVIDIA gives a sell signal. At the end of the day, it can't go straight up forever,
Right,
right? And I mean we saw it sustained appreciation higher, and we just saw a pullback.
right.
It pulls back as the classic Dorsey Wright adage that's been said since you and I first came around here several years ago.
Yeah,
The first sell signal in a strong uptrend is not
it's
indicative of
normally false.
right, yeah,
Yep.
not indicative of negative, normally a false signal. It's not even back to the middle of its trading
And
band.
that's really what I was getting there to say. If this sell signal had maybe occurred below the middle of the trading
Right.
band, or we had seen additional support violated, our tune might change slightly. But I mean, this is an initial sell signal. You didn't even get a retest of additional support down there in the mid 160s. And like you said, didn't even make it to the middle of the 10-week trading band. So didn't even sniff its 50-day moving average.
Right, right. And I think it's an interesting chart action when we're looking at it at the time of this recording on Thursday. We saw consecutive buy signals. We saw a sell signal at 170 and then a reversal higher at the close yesterday. It opened up around that point and then headed a little bit lower. So it's actually teeing up for an easier reversal lower back into O's. We'll see if the second consecutive sell signal would be given if it got down to 168 from the current level.
Mm.
But even if that happened, still not back in the middle trading band. We got support pretty close by at 166. And then support down, if we got down to it, what I think is going to be really solid support down at 152. That was
Mhm.
a level that was reached back in November of last year. It was reached again in January, and then Nvidia was unable to move past that point until June of this year. So you look at prior highs being support. I mean, it's not the classic support that we look toward, but
Right.
you actually do have support there from July
Well, and
too.
that's what I was going to say.
Yeah,
You even saw it break out in June and then pull back right to that level in
right.
July and march right on.
So
So,
if we did move lower, that would be the really kind of line in the sand point that I would look
mhm.
toward at least. And it's still up 30%. I mean, you can need a 30% haircut to really get back down
Yeah,
there.
right.
In other areas, it pulled back a little bit sharper. Nvidia wasn't the sharpest pullback that we saw across the tech space. A lot of areas that pulled back. I mean, this whole rotation, it's kind of funny. We go up for consecutive weeks. We had very strong July, kind of rocky start to August, and then rattling off streaks of all-time highs. All of a sudden, we get a few days of underperformance. It's like, oh my gosh, the AI trade's over, right?
Right. Yeah.
It's just kind of ridiculous to think about. It's like no, stocks are normal, and exhale is normal. And Palantir saw a pretty extreme exhale this week,
It was a
PLTR.
big one. It might have been a knock the wind out of you situation,
Yeah,
but
yeah. I mean, this chart rallied all the way up after earnings up to 190, which 19 X's in a single column, and those are 2 point per box size charts. So that I mean that is a rapid ascent. Talk about a successful shakeout pattern.
right.
I
Yeah.
mean that chart topped out at 160, moved down, gave a sell signal, first sell signal, strong uptrend at 152, reversed up that buy point at 158, and then went straight to 190. Right? I mean that is a very successful shakeout pattern, but then turned right back around and headed all the way down to 144 with
Well,
this
and
transaction.
what's interesting about sort of the retracement that happened, that rally did put you in overbought territory. So the potential of seeing
Oh
a
yeah,
pullback was likely, but this extent of pullback was maybe a little, it was almost as abrupt, if not more abrupt, than the rally itself that we
pretty
saw the lead
extreme.
up to it.
Yeah, but
Yeah.
I mean, even with yesterday's, or even with moves over the past 3 days, so like a lot of the broader market was down a lot. Then around 11 a.m. yesterday, it started to rally back up into the close. So we got a reversal up today, and then it's kind of flat at the time of this recording on Thursday. Even with the move over the past few days, that move from 190 down to the current levels in the mid 150s, it is still up over 100% year to date.
Well, and we're just back where we began the month.
Exactly, right?
So,
And we're still above the middle of its trading band. I mean, I think you can really kind of see a little bit more of this picture we're talking about if you broaden that chart out to a 4 point per box size chart, which sounds extreme, and you really don't get much movement until this year. But you're talking about a stock here that has an R risk reading of over 5, which means it's 5 times as volatile as the market. So that moves around a lot.
yes, in comparison, that our risk is up there with some level of leveraged funds when you're getting
Yeah,
there. I mean, it
exactly. It's a
is.
pretty extreme R risk. It means a standard deviation very high relative to the market. That 4 point box chart really does kind of smooth things out a little bit. You saw rally up in February, consecutive sell signals down during that March, April weakness, and then multiple consecutive buy signals up to that 188 point, pull back right to the middle of its trading band, and then a little reversal higher
Well,
on that
and
chart.
and I think for sort of long-term holders, one thing to keep in mind is, even with a stock like Palantir, we've only had one sequence this year where we saw more than just two sell signals.
Right.
So, I mean, there is sort of a leash you almost have to give it, bearing that in mind that, yeah, you might see a couple of sell signals every once in a while, but to our point, it's that volatile a position that really you're looking more of a true trend change rather than just a couple of signal switch.
Exactly. Yeah, well said. It moves around a lot. And so I mean, at the end of the day, looking at this, not that concerned. I mean, it is a big move lower. But it's not it's still a strong 5 for 5 technical attribute name. Not really in danger of losing. Maybe it'll drop an attribute if we see it decline more relative to the market. It got pretty close yesterday, didn't quite happen. But it's still kind of a pullback to the middle of the trading band is what it kind of seems like.
Yep, still a high attribute name, still sits high in that matrix. Nothing
Yeah.
to really to alarm you at the moment.
Right. A more concerning part that I will say, though, jump into the third chart, we'll look at the percent positive trend for technology. Both of those areas, some of the highest flyers in the tech space, and the highest flyers have been the winners
Hmm.
over so far this year, last year, half the year before that. Right? I mean, just the big names have been the leaders. A lot of the other tech stocks have had a really difficult time keeping up or improving to the same degree as those areas, especially in the small cap space. We talked about that before, but the percent positive trend for technology, it's an indicator we look at that measures the percentage of tech stocks that are trading in a positive trend.
Hmm.
Nvidia is still in a positive trend, Palantir is still in a positive trend, but a lot of tech stocks are not. This indicator got up to 44%, so half the tech stocks were still in a negative trend, hasn't been able to move higher than that going all the way back to 2021.
Right.
It's pretty surprising. We've seen banner years for tech, and it's just been led by those big areas. Meanwhile, more than half the stocks in the tech space going across all your market capitalization classifications are not in positive trends. And we saw it reverse lower from 44 down to 38. Not the end of the world kind of sign, but this is an indicator that doesn't move around a ton. And
Hmm.
so if we don't see improvement from some of those areas, could be a sign of concern maybe in the longer term moving forward.
Yeah, and I think this comes back to a conversation that's probably been mentioned on this podcast for gosh knows how many years, but that comparison of the generals versus
Mhm.
soldiers and who's participating. And broadly speaking, within the market, I think most would imagine that for even at least a couple of years now, if not longer, it's been the generals, and that's been reflected here with tech too.
Yeah.
At least as far as the PT that we're looking at right here, it gives you that visual of, the ones that have been in positive trends, they've continued to see their march higher and maintain those trends. But
Right.
if it's not, it's been a very tough go for anything else. And tech's been sort of the limelight sector when it comes to a lot of that, especially because its weight within the S&P 500 and a variety of things just being the popular sector. Um, but it is surprising to see that the rest of that sector has stubbornly not been able to participate as much.
Yeah.
And I'm sure frustrating for many to say the least. But especially if you're trying to even just look for something outside of just these massive tech names and provide a little diversification. But it also does at least confirm that if you've maintained exposure to these tech names, might as well keep doing it.
Yeah.
Nothing really to fix there.
Yeah, I mean, so a name like the first couple we mentioned, still strong long-term technical
Right.
pictures, near-term pullbacks. Some other areas in the tech space, though, it's probably what this highlights is overall declining participation for the sector as a whole.
Mhm.
So it might not be the best time to just start throwing darts at a wall,
Right.
right? I mean, I think that that's kind of fair to look at. But again, this is not the end of the world type of indicator. We've seen other instances historically where it's reversed lower and then ultimately moved higher from there. Maybe it's just encountering some difficulty and kind of pushing to new participation highs because it's been so many years.
Mhm.
Could be the case. We don't have a crystal ball. We can't tell the future. Kind of see how it plays out. Tech space still strong from a relative strength perspective, but this participation is something to keep an eye on as we move toward the fall, I think.
Yeah, and for us with participation going and even looking at a lot of these indicators, we're sort of seeing at least the past month, have sort of seen moves back up towards prior rally marks, or at least some improvement, but then slight exhales. So we're kind of hitting some sideways action for a lot of them. Um, but I mean, even then, there's been a few catalysts here that have driven individual stocks, and that's sort of been, I feel like, our main theme for a lot of this is looking at the individual names that we've seen break out this week. And retail took a lot of a lot of limelight when it
Big
came
retail
to
earnings
that.
week.
Huge retail earning. We kicked off with Home Depot, just to begin the week, but really you had Home Depot, Lowe's, Walmart, and Target all in one week. So your major retailers all came out and definitely mixed results across the board, in all
Yeah.
honesty.
Yeah, and in looking at, I mean, I think Target and Walmart were some of the ones that I've seen in the headlines a lot.
Hmm.
Target with a CEO replacement. Saw that their new CEO was been a Target employee for 22 years, which is good. I mean, good to stick with the firm.
Homegrown,
Yeah,
yeah.
homegrown, stick with the firm. Investors didn't like that.
Yep.
Stock fell out of bed. Sharks down like what 26% I think it was or something like
Yeah.
that.
Moved it back to a 0 for fiver. So it's definitely in the doldrums as far as technical picture looks, but
Yeah, down 27% about year to date before today's move. Not a great looking picture. And when you look at a relative strength chart of Target versus Walmart, Walmart reported this morning, right?
right.
and they're down around 4% at the time of this recording.
Yeah, and theirs was a little bit of a story where it was just a slight profit miss, and I think it was a investors expected more or
Hmm.
expected a more of a wow factor out of Walmart because they had done that the past few quarters and it didn't transpire. Now, I think to where we're headed towards is overall Target's picture with this breakdown got impacted a little bit more significantly
Oh yeah.
than what we did out of Walmart.
Yeah, and well, Target's picture was starting off in a worse place, right?
Right.
So you went right, you said from a one to a zero for fiber.
Yep.
A one's not good. A zero's
Mhm.
worse, but a one still wasn't good.
Yeah.
Walmart, better technical picture, pull back down to the midpoint on its trading band. I mean, you look at a relative strength chart of Target versus Walmart, we'll throw up for our fourth chart. I mean, you talk about a consistent weakness of Target versus Walmart on a 3.25% scale. I mean, that's one, two, three, four, five, six, seven consecutive buy signals or sell signals rather on its way to giving an eight. That's sustained long-term weakness, and this chart tends to be pretty cyclical. So I mean, it's
Mhm.
been going in this direction since 2021, where Walmart has been favored over Target because the chart's been on a sell signal.
Yes, and if you look prior, you'd see more short-term changes in terms of who was favored in prior instances. I mean, every couple of years you would sort of seen one rotate. Looking back at the chart's history here, and probably if you're looking at it on the screen, you'll examine that. But this has been sustained for now what's about to potentially eclipse a 4 year mark. I
Yeah,
mean, it's getting there. So, it's very much been in that relationship a Walmart dominant relationship. And I mean, the technical picture speaks for that whenever you just look at Walmart. And as does the RS chart.
yeah, and I mean, I think it's like Target's down 27% year to date. It can't go any lower. Well, it definitely
It
can.
can.
All right. And that's the thing. That's kind of why we look at these relative charts. I mean, we're at lows from an RS reading, but the RS reading can still go lower. And
Mm,
so I think that provides some helpful perspective to look toward is that saying you're probably not looking at should I be in Target or should I be in cash, right? You're looking at should I be in Target or another stock like Walmart,
yeah.
right? Right now, there's no indication of moving to something like Target, even with how washed out it is.
Yep. It's very much Walmart favorite in that relationship. One that's maybe a little bit more hard to distinguish that we were even sort of talking about here was sort of that Lowe's Home Depot picture between the two of them. Saw them both report slight different earnings stories there. You actually saw a slight miss at a Home Depot while Lowe's was a beat. But you've seen consecutive buy signals for these two for fivers. Maybe we were talking, we might give the slight nod if we were to say one or the other towards Lowe's, just based on its recent sort of action. Um,
Both of them are weak attribute names. I
yeah,
think that's an important thing to note. They're both
yeah.
two survivors, right? But they both don't, I mean, you cover up the name, you don't know the attribute, you look at it, you're like, That's an improving technical picture. It
Hmm.
looks better than it did 2 months ago, 3 months
Yeah.
ago. I mean, it's moved back into a positive trend, looking at lows specifically, LOW. Um, we need a little bit more improvement. It's about like 3% away against the market, but before reversing back up into a column of X's on that market RS chart, which has been an O since 2022.
Hmm.
Kind of an interesting deal there. Even throughout this time, we haven't seen that pick up. I think that Lowe's Home Depot, that home builder or home improvement space rather,
Yeah.
will be pretty interesting to look toward the people talking about the broader real estate space, right? Real estate's kind of locked up, no one's selling the houses, people are looking to buy, but there's no inventory there. If we see maybe people projecting some rates moving down, they might want to fix up their house a little bit before putting it on the market. You could see some of these stocks pick up the pace a little bit as we head
Hmm.
toward year end.
Yeah. And I mean, you've even kind of heard that sentiment echoed in their earnings calls that there's still the potential that you see home improvement projects. And it may not
Hmm.
be happening today, but there's anticipation that they're still going to
Oh
happen
yeah.
here. So
I mean, I'm at Home Depot or some hardware store like every weekend at this point.
it
But
feels like it every
I
time.
actually had a Home Depot box on my front
Home
porch that I went
ownership
and picked up at lunch. So
in a
great.
nutshell.
It wasn't home improvement though. It was just something to cut the hedges. So,
Yeah.
but yeah, I mean those will be interesting to monitor. Again, not technically favorable, so not an area that we recommend like jumping into.
Mhm.
Not that anything's recommendation, but just just kind of and looking toward that. But another thing to keep on the radar, if we see that more consistent improvement, it could be a more favorable area as we move
Yeah,
into fall.
it's almost like if either can get sort of their near-term relative story to fall in line,
Right.
then it's to the point where
And we're getting into peak ad season for Lowe's and Home Depot because what do they spend most of their advertising? I don't know if they
right.
actually spend most money, but where do I see most commercials? Football games.
Yes.
Commercials for football games overpowered with Home Depot, Lowe's, home improvement.
Mhm.
I mean, we know it's the target audience for it, right? I don't know. Maybe that'll have some tailwinds.
They might get me to do a home project.
There you go. There you go. Cool. You got any other charts, David?
No, not today.
Wonderful. Well, thanks for hopping on here. Good luck with the car.
Yeah, hopefully. Fingers crossed. Another
Thanks.
another project.
Thanks for everybody for tuning in here. Do want to throw a shout out. We are 8 weeks away from our Catapult conference coming up in Nashville. It's going to be October 15th. It's coming up before you know it. We're eight weeks minus 1 day, so 8 weeks from yesterday. So signups are still out there. We're definitely some spots are kind of closing up, so we're getting to a higher capacity there. So definitely, if you're interested or thinking about signing up, go ahead and sign up or be sure to reach out to us here at Dorsey Wright. We'll be more than happy to answer any questions you have. So with that, thanks everyone for tuning in, and we'll be back next week to touch base on any other action.